watching Good Morning San Diego.
Much more ahead here on Good Morning San Diego, including some tips for you on how to avoid being audited by the IRS. I've been running some of these down and going, didn't think about that. Didn't think about that either.
Yeah.
Good advice here for you.
Okay,
Stick
good.
around for that.
Let's check in with Bridget. We know it's not tax time right now, but, you know, we're thinking ahead. And a lot of people get audited. So Bridget's here with some advice on how to avoid that. Good morning.
Yeah, and there are some big changes going on at the IRS, and more people might get audited. And here with us this morning to tell us how to keep them from knocking on your door is tax attorney Ronnie Shamoun. Good morning. Thanks for being here.
Good morning. Thank you for having me.
So what is happening with the IRS that's going to make people more vulnerable to being audited?
Well, the IRS has recently hired almost 100 new agents in San Diego. About half of them are revenue officers who go out there to collect past due liabilities, and about another half of them are auditors who go out there and examine your books to make sure that you've reported your income correctly.
All right, so more manpower there means we have to be really careful with what we do on our taxes. And you have some tips for us, and I know we have some information we're going to put on our screen, some obvious red flags that the IRS is going to look for.
Right.
So talk about that. You talk about the first one, you say large changes in income.
Yeah, if you have a business and you made a lot of income one year, then the next year you show a loss, the next year you show a big gain, that could be a red flag.
Why?
Well, I mean, they wonder, you know, why is there such a fluctuation? Most businesses are somewhat consistent, but if you would, you know, a drastic change, you know, 200%, 300% would make them wonder.
All right, also round numbers on tax returns can be a red flag.
Yeah, a lot of people estimate their expenses. They know that if you had $5,000 of repairs and $10,000 of automobile expenses rounded to the nearest zero, that you're estimating, and the return requires you to put your actual expenses. So estimating numbers would make them wonder if the other numbers on your return are even accurate or not.
All right, then that's why we keep receipts, right? You get all the little details there. Also, high unreimbursed employee business expenses.
Yeah, those are for people who work for a company and don't have a Schedule C, and they spend money for their business and not get reimbursed for it. If it's high in proportion to your income, they'll wonder why. And so the IRS has this DIF score, it's DIF.
Okay.
And what it does is that the returns are recorded electronically. So certain factors raise that score. So let's say you have high charitable contributions in proportion to your income. A guy making 50 grand a year is unlikely going to donate 35,000 of his money to charity. If you have high unreimbursed business expenses, if you have losses for a business, you start up a business and you keep losing every year, they're going to wonder if it's a legitimate business or not. Those factors would raise this score, and if the score reaches a certain number, then that would call you to be audited.
And you mentioned there, you're talking about proportions, and that's really key when it comes to running a business anyway.
Right.
Right, so you're looking, they look for that thing too. Okay, let's talk a little bit more about some of the other red flags that the IRS looks out for when it comes to your audits.
Okay.
Being audited.
If you have rental losses, if you have some passive income, some people prepare their own returns, and there's limitations to how much rental loss you could take on your tax return versus your other income. That would be a red flag. There are a few of the others would be, let me see that list.
Well, you know what, you would also want to work with someone like you because you're going to have all that information. You're going to be able to help somebody if they're going through this process and finding those red flags.
Oh, yeah.
Yeah.
I mean,
So
you just want to keep your tax returns clean. Another one is a home office deduction. Whenever they see a home office deduction, they usually wonder if somebody's using their home office for personal use, and so that raises a red flag in and of itself.
All right, and to sum it all up,
just report all your income. Don't take it. Don't overstate any deductions. Just keep things clean. Keep receipts for all your expenses. And go to somebody who knows how to prepare taxes. Don't do them yourself.
there you go. Ronnie Shamoun, thanks so much.
Thank you.
All right.